Namaskar, welcome to Whitetail. Here we will explore the real reasons behind the rise in gold prices and a smart strategy to invest in stock market.
In recent years, gold has captivated investors and the general public alike with its steady ascent, mesmerizing many with its glimmering allure. The dynamic shifts in the global economy have spotlighted gold's role as a safe haven for investors, particularly as we approach 2025 when prices are projected to exceed $3,800 per ounce. Such a significant rise begs the question: what underlying factors are propelling this increase, and how should investors, especially in India, react amid fluctuating stock market fortunes? The primary catalyst for skyrocketing gold prices revolves around evolving economic conditions. Central banks around the world, notably the US, Federal Reserve, are hinting at upcoming interest rate cuts. Reduced interest rates tend to diminish the appeal of cash and bonds, thereby nudging investors towards gold, which retains intrinsic value. Additionally, the weakening US dollar plays a critical role. As the dollar's value declines, gold, priced in dollars, becomes more enticing to international buyers, thereby driving prices higher. Moreover, geopolitical turmoil, from the Russia-Ukraine conflict to Middle Eastern tensions, adds layers of uncertainty, prompting cautious investors to steer clear of riskier assets in favor of the steadfast security offered by gold. Another powerful factor is the strategic accumulation of gold reserves by nations, including China and India, to mitigate reliance on the dollar. Collectively, these elements create a robust backdrop for gold's price escalation. On the other hand, while gold dominates discussions, silver emerges as an underappreciated yet vital player in the precious metals arena. Beyond its celebrated status as a precious metal, silver's industrial applications are vast and growing, notably in electric vehicles, solar technology, and various electronic components. As the world pivots toward renewable energy sources, the demand for silver is anticipated to witness substantial growth. Although silver typically trails gold in pricing, its quick upward movements present unique investment opportunities. Therefore, implementing a diversified strategy that includes both gold for its stability and silver for its potential dynamism can be particularly prudent for investors navigating an unpredictable economic landscape. The implications for Indian investors are profound. With gold and silver poised to retain and potentially enhance their values as protective assets, integrating these metals into investment portfolios is not merely a savvy tactic but almost a necessity amid stock market volatility. As the Indian economy adapts to global shifts, understanding the interplay of these precious metals may provide a strategic advantage, ensuring financial stability during turbulent times. For Indian investors, the message is clear. Now is the time to consider the role of gold and silver in nurturing a resilient and diversified investment framework. Gold prices always hold a fascinating place in the financial universe, often acting as a bellwether for market sentiment. When gold prices ascend sharply, it reflects a cautious climate among investors, who typically shift a portion of their investments from equities to more secure assets. This isn't purely a dismal forecast for the stock market, however. In fact, it can signal a unique opportunity for specific sectors of the economy. Companies associated with gold refining, jewelry, and mining, such as established names in the industry, often thrive in these circumstances. As the demand for gold rises, so too does the revenue potential for these businesses, creating an avenue of growth even when the broader market may appear uncertain. Moreover, given their connection to a tangible asset, these companies can provide a sense of security and reliability for investors assessing their portfolios. Investors also turn to commodity ETFs and gold mutual funds during times of heightened volatility. These instruments not only attract considerable inflows but also serve to balance out fluctuations in other sectors. They act as a safety net that can stabilize portfolios, especially when market dynamics shift unexpectedly. Furthermore, international investors often consider India as a stable haven amidst global turbulence, leading to the resilience of the Sensex despite widespread market vacillation. So, what steps can Indian investors proactively take to fortify their portfolios? First and foremost, diversify by allocating a portion of investments to gold or silver. Experts recommend keeping a 10-15% stake in these precious metals, utilizing various investment vehicles such as ETFs and sovereign gold bonds. As inflation rises or market downturns occur, gold serves as an excellent hedge, often retaining value when everything else appears volatile. However, it is crucial not to engage in speculation. Gold's true purpose is to provide stability. Including a smaller exposure to silver may add growth potential given its industrial applications, but investors should be mindful of its inherent volatility. Think of gold and silver as shock absorbers in your financial vehicle. While they might not accelerate growth, they guarantee a smoother journey. In conclusion, gold's ascent amidst uncertainty embodies both trust and a durable value. As traders, investors, or savers navigate through an unpredictable market, embracing a balanced strategy remains key. Rather than succumbing to panic, focus on fortifying your investments, ensuring that your portfolio not only shines but also stands firm against unpredictable waves.